Okay, we're going to try and mind map the potential impact that a war between North Korea and the US would have on stock prices. We've been hearing a lot of trash talking between the Mad King of North Korea and the Mad King of the United States. And it's all because of the big push in terms of North Korea wanting to get nuclear weapons, and it's creating a lot of angst and a lot of uncertainty out there. And so people are wondering what would be the impact. So let's try to see what figure out what could happen. So really, in terms of some assumptions here, you got to make some assumptions. And I think one of the key assumptions here is that the U.S. starts it. The U.S. starts it. They take a preemptive strike on whatever in North Korea, and North Korea responds. So, if you want to let's get a bit of an understanding of the North Korean army first. North Korean army has approximately about 700,000 soldiers. They have about 10,000 artillery pieces, and apparently they have nukes. And a good chunk of these army or weaponry and all whatever is pretty close to the South Korean border. So they're close to the border. And more specifically, Seoul is only 35 miles away from the North Korean border. So if North Korea attacks, the biggest, easiest target will probably be Seoul, and also it'll probably be other countries like Japan would probably be another target that's well within its range. So what would happen? So if Seoul gets bombed, I'm going to basically focus on Korea, on South Korea, the impact of that, because that really has a trigger in terms of the global impact or economic impact and ultimately an investing impact. So if Seoul were to get bombed, and I'm assuming by conventional means, not like basically with nuclear weapons, the kind of line of thinking that I hear out there is that when you're looking at previous like major conflicts like Syria, Iraq, those kind of wars that took place, there's usually the country that's getting attacked. There's usually about a significant drop in GDP, and so in North Korea and South Korea's situation, it's not realistic. It's realistic to assume that you could see almost like a 60 to 80% drop in GDP. If you want to take a look at some stats about the North Korean economy, it represents about 2% of global output. So, literally, if you were to just take a 50% drop in GDP, would equal almost a drop of 1% in global GDP. Now, the big real impact, if South Korea were to get severely damaged or take the wrath of whatever North Korea inflicted on it, and if the war was extended, would be really the supply chain. So, South Korea is a critical area component in the global supply chain. There would be some serious disruption. And the reason why is kind of the influence that South Korea has on the supply chain. For example, they export 3 times the amount of intermediate goods compared to a country like Thailand. And I'm using Thailand as an example because in 2011, there was a serious flood that occurred in Thailand, and it had a serious impact in terms of shortages, components, parts that a lot of technology businesses really were dependent upon, manufacturing businesses around the world were dependent upon. Interesting thing to note about South Korea is the largest producer or the largest exporter of LCDs. And I'm only saying LCDs because, we're seeing such a proliferation of smartphones, iPhones, Android phones, and all that stuff. So if anything were to go down with South Korea, there'd be a serious disruption in terms of phone equipment that would be kind of telecommunications type equipment, and just basically technology type of components out there. It's the second largest. South Korea is also the second largest exporter of semiconductors. Again, another critical component in the supply chain. Like everything, everything is so computer driven and technology driven. If South Korea were to sustain some serious damage, and some of these semiconductor plants were to sustain some serious damage, that would have a serious ripple effect on the global supply chain, because you just don't, if you're just looking at reconstruction, you just don't crank out a semiconductor plant. On average, it takes almost 2 years to properly construct a semiconductor plant. So if a significant amount of that would get disrupted through the war, that would be a big impact in terms of economic output. Also, a big thing claim to fame for South Korea is its auto manufacturing. It is a global player. Would get in terms of cars, it's quite a big player in the world. So as you can see, just the immediate potential impact that a war would have would be incredibly disruptive in terms of that whole supply chain. You'd have a major supply chain disruption. You would have shortages of all kinds of different components that a lot of industries are dependent upon. So that's, when you look at it, so that's one really big kind of impact that Korea has. And again, we're looking at Korea. Now, if you were to go look at Japan, again, totally different, a lot of the same components here would be in play in terms of that whole supply chain aspect of things. So that's one element to look at. So now let's try to draw a line between the impact that this would have in North Korea and kind of draw that over to how it would impact the North American economy, or maybe specifically more the U.S. Economic impact. Well, the big one is, if the war was a really sustained war and extended for a long period of time, it would have to be funded. The American government would have to fund it. And so one impact would be a lot of increase in debt by the U.S. government, federal debt. And, right now, it's already 75% of GDP. So imagine if they went into a serious war, a serious conflict with North Korea, it could go up even higher. Then there's the also side of it, reconstruction. I guess the Americans would be expected to contribute to any reconstruction efforts in wherever, South Korea or Japan or any other countries that would sustain damage or collateral damage from a conflict. So that's going to add additional debt burdens also. And some estimates I'm reading about there is just another increase. It's almost another 30% in debt. Impact of all this, of course, is if the U.S. government has to take on more debt, that's going to put pressure on interest rates to go up, and which ultimately is not good for stock prices. Now, in terms of a market impact, if we go back in history, usually in the short term, the onset of a conflict, of a global conflict, tends to be a sort of a shock in the market. So it wouldn't be surprised to see major stock markets all around the world right away go down in the short term. However, history has also shown us that in the medium term and long term, that markets tend to recover. Part of the reason is central banks will step in and increase the supply of money, increase liquidity in the market, kind of keep things a little bit in control. So that's one element. So long term, ultimately, stocks tend to hold their own over the long term. So if a war broke out, chances are you probably see a quick shock to the stock. Stock prices would go down quite a bit at the start, but then they would recover. So if you're looking from an investment perspective, it may be a cool thing to, use that opportunity to kind of buy some stocks, buy some companies that that are cheaper, that are in your screen. Might be a good buying opportunity there because ultimately history has shown that they tend to recover. And so there's an opportunity to put some money work in that sense, as kind of cruel and morbid as that might be. Other impacts in terms of investing and impacts is usually gold will go up in times of uncertainty, but also we might see an interesting thing with the cryptocurrencies. We're not just the gold, with the bitcoins and the Ethereum. The whole concept, really it's all about uncertainty. But ultimately, when we're looking at impact, we're just looking at serious disruptions. We're talking about a big disruption in economic activity, and ultimately that is going to feed into into profits, and it's ultimately going to feed into stock prices over a long time. So it's really the extent of how extensive the war would be, which kind of drive obviously drive the economic impact. If there's not as much collateral damage, if there's not as much disruption and uprooting of people, that could play into effect. Of course, this is all based on an assumption that this is sort of a conventional attack that's done, and then there's a conventional response. Now, if it were to get into a whole if they were to get in a situation where nuclear weapons were to come into play, and the United States bombed North Korea, or even if North Korea were able to get a few weapons, nuclear weapons detonated in South Korea or Japan or everything, then really all this kind of gets elevated, gets magnified to a whole different level of craziness. So that's kind of what potentially could happen in the impact of if the U.S. were to initiate an attack on North Korea or a preemptive strike on North Korea. It would create quite a bit of quite a bit of disruption in the global supply chain, specifically from South Korea and Japan. It would create a short-term shock to the marketplace potentially, but then over the long term there would be an element of recovery. But then again, it's all dependent on the type of conflict that's carried out. If it's a conventional one, some of the things might play out, according to history. But if nuclear weapons come into play here, or chemical weapons here, and there's a significant destruction of infrastructure and life or whatever, then you know what? All bets are off.